know, some people think that you're Satoshi. I thought the first place to start is most people know you were early to Bitcoin, but early can mean a lot of different things. You actually got the very first email from Satoshi Nakamoto.
Hey everyone, and welcome back to Crypto Alpha. Don't forget to like and subscribe for all the latest content to keep you up to date in the crypto and IM markets. Today we're taking a look at the fascinating interview with Anthony Pomp and Adam Back, CEO of BlockStream, the Bitcoin mining company. Adam Hu claims he was one of the first people contacted by Satoshi Nakamoto. He even goes as far as to say, "I actually got the very first email from Satoshi Nakamoto. It was in August 2008. He describes the initial exchange as technical, focused on citing his Hashcash work. He discusses his initial impressions of Bitcoin, its solutions to earlier electronic cash system failures, and the challenges of bootstrapping value in a decentralized system. The interview explores the shift in how Bitcoin is viewed from a niche technology project to an investment opportunity, digital gold, and potentially a strategic asset. It details the institutional adoption wave and the development of Bitcoin financial products. Back outlines BlockStream's mission to facilitate Bitcoin adoption and its focus on Layer 2 solutions, liquid, mining decentralization, and asset management catering to institutional investors. Back provides his perspective on Bitcoin's potential price targets, driven by supply dynamics, ETF adoption, and possible government involvement. Now let's jump straight in and listen to the interview together.
Adam, I thought the first place to start is most people know you were early to Bitcoin, but early can mean a lot of different things. You actually got the very first email from Satoshi Nakamoto?
That's right. It was in August 2008. And I have some software and papers online. And so once in a while, you'll get a researcher or developer email you. So I just thought it was another researcher and that was his real name, right? Satoshi Nakamoto. But yeah, so it was a kind of exchange and then some more email exchanges in January 2009 when he kicked off the network.
What was he asking, or what was he saying?
So it was like a fairly brief exchange. So basically, I'm using your Hashcash work. What's the correct citation for it? And, because it's not published in a journal, it's just published on my own website. It's a kind of tech report. And then I sent him some suggestions of other things to look at, including Weidai's B-Money, which he promptly turned around, contacted Weidai, and added a reference to that too, to the paper. So, and then, just some general email about like related systems.
Basically. Yeah. Did you go and look at what he was actually building, or was it just email communication, but you actually didn't go look at like what the
So it's something I looked at the outline. I don't seem to, I think it was like a link to some kind of download site. So I couldn't really get the original paper back later because that site wasn't there anymore. And then in 2009, Hal Finney was one of the early users, and he wrote a kind of experience, like a report, like an experimental report about this is how it works, this is what I think it's doing, that kind of thing. So I read that. And then...
And what did you think when you read that?
Well, I thought it was pretty interesting because I was involved with early electronic cash systems like DigiCash in the mid-90s. And that one, there was an experiment to try and bootstrap value in it because they made a kind of promise that they weren't going to issue more than 1 million units. So some of the people on the cypherpunks list, including myself, started selling stuff. Pretend it's worth $1, sell things for it, we can bootstrap it. And then it went bankrupt and it was a central database. So that was the end of that, right? And so, the lesson people took from that is centralized systems can fail. We need a decentralized way to get electronic cash. So people try to figure out how to do that. Nobody quite managed to crack it. Proof of work was part of that kind of 1998, 1997 discussion after I published Hashcash that, mining was part of it, but nobody had figured out how to control inflation and put it all together. So Satoshi put it together. And so I was immediately seeing that it looks like he's solved a missing problem. And, next question was, well, will it bootstrap? Because you release a bit of tech, no telling if people adopt it, if it develops a market price, that kind of thing, right? And so I thought, well, I'll wait and see. This is exciting. Let's watch, right? It took a few years before, there was an exchange or a market price and so on. So you'd see it pop up in the news once in a while. So I remember it crossing $1 and then $100. And I was like, okay, like that's, I mean, the total market cap's not so big at that level, but that's clearly something.
Like psychological milestones.
Yeah, something's happening. So then I did the usual Bitcoin rabbit hole and like read the next level, ran out of things to read, went and found the developers hanging out on IRC to ask them more questions, which are not documented anywhere at that point. And then I developed some ideas to improve privacy in it, which was confidential transactions. Mm-hmm. And then I tried to see if there was a way to integrate that into Bitcoin. I realized actually it's pretty hard. We've seen that more recently, right? That it's hard to make changes to Bitcoin. You got this consensus process. So I developed a sidechain idea. It's like, okay, let's make it more modular. So, and that's what I started BlockStream to do in 2014.
Do you want to know Back's Bitcoin price prediction? I think 500,000 to 1 million cycle top in this cycle is within bounds. He bases this on supply dynamics and ETF demand that is absorbing 5 to 7 times mined supply. Back goes on to say, ETF investors buy and hold and are sticky with the view that Bitcoin could pass gold in market cap this cycle. Also, that many investors will sell gold ETFs to buy Bitcoin ETFs. Pomp asks Back whether this is because of the potential for a U.S. strategic reserve. Back says, that's not including that factor. He goes on to say, if that happens, all bets are off. He says, if this happens, this would force other countries to react. Back says his company BlockStream's view is anything that is slowing down Bitcoin adoption, we'll do it ourselves. Now let's get back to the interview.
Some people have the theory that the halving should have a lower effect over time, but actually I believe it's sort of offset by reduction, by more and more coins getting cold stored and people adapting to the way that they're going to interact with Bitcoin to kind of accumulate rather than speculate. And so, the proportion of mined coins that halving reduces is more constant than people would think with, the amount of coins that are available to trade on exchanges or something like that. So that's shrinking and the halving shrinking. So as a percentage change, it's more constant. So, continue to see a big halving effect. I think, one theory which is going to be tested this cycle is the diminishing return theory. And so people are drawing extrapolations from the last bull market being a bit muted, but I think there are lots of overhangs on that, the COVID, supply chain, all the economic effects around that, plus, the DeFi failures and so on. And I think the other thing is, technology typically goes through an S-curve. And I think we're still early. We're in the industry, so we feel we're at late stage, but it's actually still early. And so I think there is scope for kind of more rapid adoption phase. And if that happens, this kind of inferred slowdown may be reversed. So, if we see this cycle having a much higher cycle to cycle increase than prior cycles, that would kind of invalidate that, possibly invalidate the power law or even stock to flow. So, I think a, sort of 500,000 to 1 million cycle top in this cycle is within bounds. So
you think that this cycle top could be between 500,000 and 1 million?
Yeah.
That's a pretty high number.
Yeah.
Do you think that is predicated on the U.S. having to buy Bitcoin for the strategic reserve, or that could happen without that?
I think if that happens, all bets are off because you get kind of, country level. I think other countries have to react if and when they see that, right?
Talk me through this more. Hold on. This is a big number. 500K to 1 million. I don't think you're saying it's going to do that. I think you're saying it's possible.
Right.
What are the assumptions that go into us driving a price that high?
Well, I mean, there's a lot of things going on at the moment, right, in terms of ongoing buying demand. So the ETFs have absorbed about 2 times the mine supply since launch. MicroStrategy and the other treasury companies absorbed another 2 times the supply. There are active traders absorbing another time. So, there's retail dollar cost averaging. So there's somewhere between like 5 and 7 times the mine supply being bought. And we're in some kind of, short-term consolidation where short-term investors or medium-term investors are taking profit. But I think, they can only sell once they're gone. Then there's a kind of supply shock situation. And you get a lot of reflexivity in Bitcoin markets where, the price is up because the price is up. That's how we get kind of exuberance and then the blow off top. And And it's also still fairly early in the cycle in terms of, 6 months after the halving till 18 months, 2 years after for the cycle. So there's a lot of time to run. And other metrics are shrinking, right? Like coins on exchange and that kind of thing. Another thing which is helpful, which wasn't necessarily predicted, is the ETF holders seem to be sticky. So they're, what Warren Buffett would call good investors. They buy and hold. They're not, shaken out by a small move. They're there to, hold a position. I think the other thing that could help this phenomena is you've got to think that when the people buying the ETFs, so about 30% apparently is institutional. The rest, I presume, is kind of the top 10% wealthy in the US minus the top 1%. I think they have about $30 trillion. So they have a low allocation at this point. But when they call their broker or financial advisor, they're reallocating from their portfolio. And so the question is going to be, well, what do you want to sell to put your Bitcoin position? The natural answer would be, we'll sell the physical gold ETF, but a Bitcoin ETF. And the other phenomena is that the proportion of gold that's in ETFs is a lot smaller than proportion in Bitcoin. So I think, you could see if there's some momentum on this, that, the other target I like is that Bitcoin could pass gold in market cap this cycle, which is around the same level, but it could do that while taking the shine off gold, basically, because price is set at the margin. If a lot of retail or like relatively wealthy US investors are selling gold ETFs and buying Bitcoin. Now, of course, it's partly offset by global macro, where governments in some cases are buying gold. Mm-hmm. But I think some of the US politicians are talking about selling gold and buying Bitcoin too. So if we've seen that will change the game.
Do you think that'll happen?
The latter, I'm not so sure. It's all down to politics, and that can be slower than anticipated. It's quite complicated and not my area. So I'm just focused on a workable regulatory environment where there's no kind of unreasonable friction and the free market doing its thing. I think the global macro helps in a way because Bitcoin is a hedge to a lot of that.
When you look at the market today, it feels like there are what I'll call Bitcoin companies, which are focused on, layer one, what Bitcoin originally was. There's been a rise of L2s, side chains, and many other components. Some of it is focused on scaling. Some of it is focused on bringing the R&D that's happening in altcoins over to the Bitcoin market. What's kind of your evaluation of these things being built beside or on top of Bitcoin, and everything from the Lightning Network, Liquid?
Yeah, I think it turns out that blockchains don't scale very well. And so layer twos are sort of inevitable to at least be able to manage the retail payments and the trading and like share transfer and share settlement kind of use cases. Now, one thing which is not ideal, but technology is what it is, right? And everybody's trying to push the envelope on this, is that you get the best security assurances by holding your own UTXO, and UTXOs are hard to scale. And, layer two UTXOs are not as hard assurance as layer one. So really, in an ideal world, everybody who wants one should be able to get a layer two UTXO, but we don't really know how to do that, right? So I think that's something that is in the mind of technologists is, if the active user base goes from 100 million to 1 billion people in the next few years, not really ready for it. So, it always spills off into something else, right? So they end up using custodial, some of them buy ETFs, some of them store it in layer two or, partly store in layer two. And I've seen a phenomenon emerge where people will kind of do their dollar cost averaging into Lightning and then fold some of it into Liquid. And then when they've built up to a bigger amount, they'll store it on the main chain. So, I think the economic forces keep people using what scalability there is in the different technologies in a sort of natural, economically rational balance. And that's the best we can do, to sort of adapt and use technology that proves to work in the market.
Mm-hmm. When you look at the entire Bitcoin ecosystem, it feels like it's probably the biggest melting pot on Earth. You have people who come from different countries, different languages, religions, wealth, education, everything. And they're all united by this kind of common ethos or value of Bitcoin. now that the Wall Street political, kind of world, et cetera, is all embracing Bitcoin, does that mean that the ethos and values have really kind of assumed a position of importance? Do I used to say all the time that like, we'll have a Bitcoin president. They're not going to run on a Bitcoin platform. They'll just like own Bitcoin, like they own stocks or whatever, and they'll be the president. I was wrong. Like,
yeah,
the current US president literally ran his, I'm going to protect your Bitcoin. I'm going to be the Bitcoin president.
Right.
And so I don't know if he in particular is like a hardcore Bitcoiner and could like, espouse the different values and ethos that maybe somebody on, X would. But it does feel like if you look around the world, whether it's Bukele in El Salvador or, Milei in Argentina or, name other examples, it does feel like the values are kind of permeating into these organizations as Bitcoin rises in popularity as well.
So what do you think? Is Adam Back right on his outlook? Do you think he is actually Satoshi? Let us know in the comments section. Thanks for watching the video. Please don't forget to like the video and subscribe to Crypto Alpha for more in-depth crypto interviews.